Hello, Oracles. Well, today wasn't the most pleasant of days. We were right across all of the indices with the NASDAQ down just over 2%, and Tesla was down almost 5%. So what caused the sell-off today? Well, part of the sell-off was due to the Fed coming out and stating that they are, sounding a little more hawkish, and I think that is what caused the whole market to sell off entirely. So them talking about, perhaps going with a 50 basis point hike in the future, or them running off their balance sheet a little bit sooner, is news that we had heard before, and then it kind of sounded like they were going a little more dovish the last time. And so they're kind of swaying both ways, and I gotta be honest, they're in a very difficult position, and so they're trying to just see how things are flowing and then making decisions accordingly. So whereas before we thought we were going to get a 50 basis point hike potentially in May, that kind of got pushed to the wayside. So then the market rallied. Now those thoughts are coming back, and that is what caused the market to sell off a little bit more today. So we will know for sure on the May 4th and 5th as to what they are going to do, whether it's going to be a 25 point or a 50 basis point rate hike at that time. And again, going by the timing, but what we've been talking about is that could potentially be the second bottom of the market, and whether we hit the lows that we hit before or just coming down close to it and then coming back up, we'll obviously have time to tell on that one. But I think what's going to happen is between the CPI data in April and May, we might actually get a downtrend started. So we might see about a month or 2 to 3 weeks of a downtrend that starts. And I don't think today is the start of it. You never know. I mean, last time I thought it was going to start in mid-February, and it ended up starting in mid-January. So, sometimes big money is ahead of the game. They're the ones who kind of lead the way, and then they wait to see where the retailers are going to follow, because retail always lags behind big money. Big money makes the moves, the algorithms make the moves, and then all of a sudden retail follows afterwards, like, oh, we're time to sell off. And so everybody sells off on top of what big money is selling. And again, this goes in the opposite direction as well, whereas we've been on an uptrend and, we've been going up and up and up, and, discussions can be had as to whether we've pushed beyond where we need to be. Just looking at the charts alone, RSI, especially for Tesla, was over 70 yesterday. So that would be an indicator that we are overbought and should sell off. And with the sell-off today of almost 5%, that brought the RSI down to 64. So tomorrow, now that the Fed discussion has been had, we heard what they had to say about the rates perhaps going up faster, or perhaps about the balance sheet getting run off sooner, that there has now been baked in and priced into the market. And so tomorrow might be a flat day. We'll kind of see how that plays off. We did have a sell-off into close, so that usually is an indicator that tomorrow could start off ugly. But, we've had so many turnarounds. We were up 2% yesterday, down 2% today. We're still in a situation where it's wild swings both directions. There's still not a lot of volume that is coming through in the market right now. So that just means that when the market does move, it usually moves more because there's lower volume. And so for Tesla in particular, we saw even more of a sell-off today. Tesla usually moves more than the broader market does anyway, but we did have a nice little run yesterday. So a little profit taking today is totally normal and natural. This is not anything that concerns me as far as the 5% drop today. Not a big deal. A bigger concern for me is the Shanghai reopening. It could potentially open up on August 11th, with the latest date opening on August 18th. That is significant because that is more than half of the month of April being shut down. So that is a significant chunk, somewhere around 40,000 vehicles of production not happening. And Berlin and Austin are not at the point right now where they can make up for that, and Fremont can't either. So I look at it in two different ways when it comes to that. It could be, a godsend because, hey, supply chain issues are already holding them back. So they were going to be held back anyway. Now they can kind of let supplies build up, although supplies and some of the stuff that they're getting are coming from those areas that are affected as well. So could potentially spiral and make it even worse. Either way, that to me is a major concern. So we'll have to monitor that and see how that goes. but that could have been also another reason why we sold off a little bit more today. I think tomorrow, because we sold off so much today, might actually be flat, might be a little buying at the end of the day, knowing that we have the Cyber Rodeo going on Thursday. So I would look for, maybe an ugly start to the day, perhaps a little bit of a run up into close with the anticipation of the Cyber Rodeo on Thursday. The Cyber Rodeo Thursday, I have a feeling we're going to have a green day. We're probably going to get a Cybertruck unveiling of some sort, maybe the latest prototype, maybe the pre-production prototype. We shall see what happens. And then we'll probably get other inside information as to what is going on for the future of Giga Austin, which is similar to what we got out of Giga Berlin. So that could cause a nice green day on Thursday for Tesla. And then on Friday, a little uncertain, depending on how much we run. If we run on Thursday, might get a little bit of a sell-off, might get continued running on Friday based on the news that we get on Thursday. And then going into the weekend, you never know, maybe we sell off. So Friday's kind of a coin toss for me. I'm really not sure yet which way we're going to go on Friday. Looking at next week, I think next week is where we could start to see things get ugly. Just because we have CPI coming out, we know that it's going to be high inflation. We've now gotten a little indicator from the Fed that they could potentially be raising rates 50 basis points again. So with that being said, if inflation is coming in higher and we know it's going to come in high, that could be a little signal for the market to sell off some more. And that might be the turning point where we start to sell down. Now for Tesla, we do have the Q1 earnings call coming up on 4/20, so that's not short afterwards. I mean, that's only a week after the CPI data comes out. So I'm really not sure how much Tesla is going to sell off, because if their numbers come in really well, they might kind of ignore some of the macro environment that's going on and continue breaking through this, because we might get on that earnings call more information about the split, because then we'll get the proxy afterwards, which is going to be the official announcement and news about what's going on with the split, when the annual meeting is going to be, because we have an assumption that once we get the annual meeting, it'll be shortly thereafter that we are going to get the split. So a lot of that information should be coming out in the next couple of weeks. And so the way I'm looking at it is with conflicting sentiment going both directions, with the macro sentiment being a lot more negative, but Tesla's sentiment being positive. If Tesla does sell down due to the macro environment pullback, I am going to be buying heavy, because I've been saving up cash. I've been selling off a few of the unwanted stocks that I have, waiting for this moment to be able to dump more in. And again, I don't know if we're going to pull back to 700 where we were previously on that dip, but we might pull back down into the 900s under 1,000 again. And at that point, I'm in, because I think once we get past the May 4th and 5th FOMC meeting, that is when we are going to start going back up again. Very similar to what we saw in mid-March, where it was a sell the rumor, buy the news. We may end up getting the same exact play out going this time around as well, where we're thinking about the Fed raising rates 50 basis points, and what's going to happen, I think, if we get to that meeting and they only raise it 25 basis points, we can really take off. Because it seems like the market is anticipating right now a 50 basis point hike. So if we get 50 basis point hike in May, we might actually rally a little bit out of it, because that's what we expected, or we might be flat. But if we get a 25 point basis hike, we could really take off. And I think from that meeting going through the majority of the summer, we are going to get a massive rally going on. And now that's not to say that we're out of the woods, because we do still have very high inflation. We have the Fed, who's going to be raising rates most likely for like the next year and a half or so to get us back into line to where we need to be. Then we also have potential recession fears, which Kathy Wood had spoken about, a lot of times the recession happens after the Fed stops raising rates. So that could come sometime in late 2023. So we've got a lot of different things that are going on, but if we can get a nice 2 to 3 month rally over the summer, that could be a great opportunity to again sell off some of your unwanted stocks and then consolidate that money into your high conviction plays, awaiting to see what's next in line. Because then we do have the midterm elections coming, and usually starting about mid-September through the end of October, we get a lot of selling off with the uncertainty as to what is going on. So that can be another buying opportunity and volatility going on at that point. But for the majority of the summer, probably won't be much impeding us. So we could have a great opportunity to run, and Tesla could take it to all-time highs at that point, especially with a split coming. And so again, today did not worry me one bit. Our 5% sell-off, not a big deal. I did not buy today other than my normal daily allotment. I am still waiting to see what's going to go on. I am still not trying to time the market, but making an educated guess that we are going to get a second dip coming towards the end of April. So I'm going to be saving money until then. But this is also why I still dollar cost average every day. Because if we don't end up getting that dip, I'm still buying in. And now I'll just have some more cash on the sidelines to be able to toss a little bit more in here and there. So just my strategy to keep myself agile and play it on both sides. Let me know your thoughts in the comments. How do you feel about today? I know we've been rallying quite a bit over the last couple of weeks, so it's kind of disappointing to see a big sell-off like this today. But again, we're still just under $1,100, and this is kind of where we were consolidating last week. So for me, if we're going to consolidate around this place, still not a bad thing. You know, we're under 70 RSI. If we consolidate, that keeps us down at that point. So let me know your thoughts in the comments. Let me know how you're feeling about this. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.